Will the fall market outpace last year? And why are there so many eyes on the Chicagoland market in general? We're going to cover that and more in this week's report. As always, thanks for taking a few minutes to join us for our weekly look at real-time market insights into our local housing market. My name is Scott Parker. I'm the Vice President of Sales and Marketing here at John Green Realtor, and I'll be taking you through this week's info. So let's jump in. New listings first. Here's new listing activity, and you can see we continue to trend down seasonally. That's pretty normal, but notice how those 2022 and 2023 lines are ever slightly starting to come together as we head into the fall. Let's go over and look at contract activity. And one of the trends we're watching that led to a prediction this summer was that it would not be surprising to us if contract activity started to outpace 2022 as we head into the fall. I think these next few weeks in contract activity will be very telling. I think it's likely we will see that happen, especially if we get any type of movement downward on interest rates. Here's showing activity, and this looks to have settled into a pattern where we're just off pace from 2021, but still outpacing 2022. So really solid demand activity as we head into the fall. Here's off-market activity. So this tracks those homes that are on the market and came off the market without finding a buyer successfully. And this market's been staying this metric has been staying pretty steady over the last 4 to 6 weeks. Here's our balance metrics for this market, and 60% on this graph kind of connotes normal balance. And we had new listings trend down and contracts pick up, so this number is on the rise as a result of these last couple of weeks. And here we had an off-market activity, and you can kind of see the same trend appearing here. Here's our look at national data. I grabbed a chart from Lance Lambert, who is the real estate editor for Fortune Magazine. He is a great follow for those that are interested in real estate market data on Twitter, or I guess X, or whatever we're calling it these days. I thought this was worth sharing. He's watching certain markets that may be starting to show signs of overheating. But what was more interesting to us locally is how he is using Chicagoland as his proxy for a lower risk market. So kudos to our senior vice president of our commercial team, Seamus Conley, who does a lot of work with builders and developers for this analogy, but he calls our market the peanut butter and jelly market. It's not necessarily super hot on the streets, but it's a reliable staple you can kind of always count on. And that's really what we're seeing when it comes to development in our market. A lot of developers getting out of the high growth markets and looking at Chicago market because of its stable fundamentals. So stable is obviously very good for buyers and sellers, and we should be poised for some modest growth and home price appreciation for the foreseeable future as a result. So to recap, we're watching the contract and showing rate trends very closely, as we may see this fall outpace last fall, and a lot of attention on Chicago because of its low risk, stable environment for real estate. So thanks as always for joining us, and we'll see you again here next week.